Hello to the audience for the panel, The Digital Euro Legislative Proposal, What is the Crux? And welcome to our great panelists, Daniel Sego, Brett Walton, and Dr. Cyrus de la Rubia. I also want to give a special thank to our standard members, especially our gold member Ripple. The European Commission, in collaboration with the Governing Council and European Parliament, published the legislative proposal on the establishment of the digital euro in June of this year. This legislative proposal aims to give legal ground for a digital euro for the 27 countries within the European Union. Quite an ambitious goal. The Digital Euro Association welcomes the proposal for regulation on the establishment of the digital euro. The digital euro can be a key driver for future financial services in the European Union, both as a complement to euro banknotes and coins and as a catalyst for innovation and competition in the EU. However, it is important to note that the implementation of a digital euro comes with challenges that need to be addressed. These include challenges around data privacy, cybersecurity, regulatory complexity, and the potential effects on the banking system. Policymakers must carefully evaluate these challenges to develop a digital euro that can effectively serve its intended purposes. Regulation should play a key role in helping to address these challenges. Furthermore, it is necessary that the proposed regulation on the digital euro is future-proofed and technology agnostic to maintain its validity when conditions changed. The legislative proposal for the digital euro is not only impacting the European Union, but will also set a precedent for other regions and countries seeking to explore and implement their own CBDCs. Let's take a look into the proposal. What is in it? The legislative proposal consists of 10 chapters about definitions, issuance of the digital euro, legal tender status, distribution inside and outside the euro area, the use of a digital euro, including the holding limits, which have been discussed quite a lot, technical features, privacy, and AML. In general, the DEA would recommend a more design-agnostic approach, as well as a deeper look into which further regulations and tools could support the definitions and implementation of a digital euro. Furthermore, it's essential to evaluate which competencies and roles should be allocated to specific institutions to avoid ambiguity and unnecessary complexity. Here are some general thoughts of the DEA. The proposal focuses very strongly on retail payment use cases. It is not clear how far these technical features are designed with the potential of more innovative future use cases. For example, micropayments, machine-to-machine payments, or payment infrastructure or for security tokenization use cases. Second, given the complex nature of potential use cases, the development of a high-level rulebook on the functionalities and use cases for digital euro should be taken into consideration to ensure consistency, smooth user experience, and privacy. And third, to foster trust and privacy and an open source approach to the digital euro design, it is recommended at least granting read access to the source code of independent auditors regularly. Generally, we would also like to encourage a more user-centric perspective when deciding about specific digital euro designs and attributes. As the European payment market is very competitive, the digital euro needs to have a clear value proposition compared to existing forms of money in order to be adopted. We will now deep dive into the particular chapters and analyze whether the Commission is sufficiently and reasonably addressing the respective issues. Dear audience, you are able to ask questions in the chat. Please add the name of the speaker if you want to address the question to a specific panelist, and we will go through the questions after our discussion. Before we start with the discussion, I would like to ask our great panelists to introduce themselves. Let's start with Brett.
Hi, I'm Brett Walton. I'm Head of Partnerships at Fluency. Fluency is a multi-CBDC and tokenized asset solution provider.
Thank you. Daniel.
So, hey everybody. This is Daniel Szegő. I'm a software architect specializing dealing with distributed ledger and digital currency projects for a while. Basically, I was honored to participate in this working group for giving the commentary and the feedback on the digital euro proposal in the middle of the summer.
Thank you. And Cyrus?
Hi, everybody. I'm Cyrus de la Rubia, Chief Economist of Hamburg Commercial Bank. It's a German bank located in Hamburg with domestic and international business in real estate, shipping, and infrastructure, including renewables, as well as corporates. I think that the digital euro could be a platform for modern solutions in the payment area. And given that for most people, including many of our clients, the digital euro is still very abstract, it is necessary to do kind of educational work. So thank you very much for having me here.
Thank you. So first question for everybody, starting with Brett. What was your first impression of the proposal? What are your key takeaways from the legislative proposal for the digital euro?
Yeah, obviously echoing those comments from the DIA, but kind of in my personal opinion, I think the proposal recognises the importance of actually developing the digital euro, establishing a framework to facilitate its introduction and ensure a successful implementation of the digital euro. This obviously reflects the growing interest and demand for digital currencies right the way across the EU. I think one of the key takeaways really is that the proposal emphasises that basic services will be free of charge to citizens, will compensate intermediaries, but also protecting merchants from potential, overcharging, monopolies, duopolies. So I feel this approach aims, to strike a balance between public accessibility and the fair compensation for service providers. Overall for me, the proposal underscores the ECB's commitment to exploring and potentially implementing the digital euro, while also considering various stakeholders' perspectives and ensuring the project's sound design and governance.
Daniel, what are your key takeaways?
Yeah, so actually, my impression is that this proposal is focuses on kind of a quick win. So basically, it describes or it focuses basically on well-established technologies and ideas, like mostly on instant payment or chip cards. It has of course pros and cons. So like the advantage of the benefits that it can be very fast realized practically implemented the digital euro with practically minimal risk. Technology risk like security and stuff like that. It's just because indirectly what's behind the proposal, these technologies are again well established and are on the market practically for long. The disadvantage that I see basically it's just kind of missing a little bit the innovative potentials practically, or it might miss the innovative potentials. It's like like use cases like micro payments, machine-to-machine payments, tokenized payments, especially like with the possibility of integration perhaps in the future with like metaverse or DeFi. This is what's mostly missing, and then there's kind of a hint like for micro payments or machine-to-machine payments, if I'm not mistaken, but it's not very much detailed how it can be basically realized. There's one innovative thing that's mentioned actually in the proposal, that's the European Digital Identity Wallet, but it's again pretty much in research as far as I know, and I'm not quite sure that's kind of a wallet which is like probably verifiable credentials, and it can be integrated with like a classical payment solution. So it's questionable for me which advantage or which future potential it brings. So again, that's my brief again personal opinion. Again, the advantage pros or disadvantages cons of the proposal.
Thank you. And Cyrus?
Yeah, well, I think the European Commission has implemented a few markers in the process. The keywords are here: the ban on interest rate payments, and the separate law to safeguard cash as a means of payment. And I think that with both measures, the EU Commission wants to encounter the fear of people that the ECB intention is to steal us our cash money and to introduce negative interest rates again, like we did have for many years. So it's more political. Its intention is to dispel mistrust against the project, which certainly is necessary to make a success out of it. Apart from that, together with the progress report, which was published by the ECB some months before, I think that the fog around the digital euro is gradually clearing. My feeling is that the project is finally, well, not really entering its home stretch, but it will take still many years. But it's much clearer what we are heading towards, and obviously we will have pilot projects and testing the technique and so on. But it's much clearer than before, and overall I see the proposal as positive. There are critical points, yes, but overall I would say it's a positive thing.
Thank you. Brett, how is the proposal received by industry experts?
Yeah, I mean, following on from Cyrus, obviously a lot of work has been done thus far, and there's still a fair amount to obviously be concluded. But generally, those that certainly I engage with, on a regular basis, there's been positive dialogue. I think, given the amount of work that's been done, if we're talking about today, but from an overall perspective, the readiness from Europe and European providers to develop the actual digital euro solutions has strong support from private sector, which indicates that a digital euro can be smoothly integrated into the existing European payment landscape currently today. So from my perspective, in terms of those that I'm engaging with, yes, it's been positive, overcoming some of the challenges, and as I say, still a long way to go, but making good grounds. As I'm sure most are aware, our CEO, Inga Mullins, sits at the Market Advisory Group with the ECB, so can appreciate how much work has been put into efforts to date.
And Daniel, which implications does the proposal have for citizens and retail customers using the digital euro?
Yeah, so I would say that the primary use case at the moment is like bank the underbanked. It's like providing payment solution for those who are practically underbanked a little bit, like on the market. There can be like direct use cases as well. I would guess like foreign students or refugees can just directly use the systems. And then, well, especially, I mean, if somebody has like a limited banking service for somehow, so I wouldn't really speak of like unbanked in Europe probably, but like underbanked, then it can provide actually a better payment experience, especially like better providing like online and offline payment in basically one system. So if you just consider at the moment cash and online payment are just two totally different systems, not just technically, but from economic point of view and then legally as well. I mean, this system could combine actually this payment experience in one system. Last but not least, I would say if it is good realized or if it is good formulated, it might be actually the basis for further payment innovation as well. And this might be actually, I guess, like more important than just having like even having like a short-term digital euro payment solution on the market.
What do you mean by further payment methods? You mean like other forms of a digital euro?
I mean further payment innovation. Again, so these are the use cases that I mentioned previously. It's like micropayments, machine-to-machine payments. tokenization, tokenized payment, programmable payment, and so on and so on. These are what I consider as further payment innovation, which are still not widespread, I would say, but I mean, it can be seen that these innovation will be coming in the coming years.
And you think the digital euro will be the tool for that?
It can be the tool for that. Yeah, it can be actually a basis and a tool for that. Yeah.
Okay, thank you. Cyrus, which implication does the proposal have for merchants and banks using and working with a digital euro?
Well, as you know, banks will have to onboard their clients, enabling them to use the digital euro. This is a kind of new service, which is good because it ensures that the customers stay with their banks. Obviously, it will, at the end of the day, depend on the service quality if the clients stay with their banks. But in this context, banks will need new hardware and software, and the same is true for the merchants. And I would say that the banks have to build up some know-how in this context to advise their clients in this respect. Apart from that, in the banking sector, there is still some fear that the ECB will build up, let's say, a payment provider which enters into competition with banks, meaning that the business of offering payment infrastructure and services around payments may vanish. This may be indeed the case for plain vanilla payments, but I think the interesting business which is connected with some profit margins for banks is not the payment service for retail clients, but with corporates and institutional clients. And here I think that tailor-made payment solutions are still a thing banks are in the best position to serve. Because the ECB does not seem to be keen or interested to develop complicated payment solutions on an individual scale, but only the base solutions on which banks can build their solutions. If anything, competition will come from other non-bank payment providers, but this is something which is already happening today. So this is, in a way, what is one thing that is discussed more intensively among banks.
Okay, thank you. Brett, how do you see the implications for offline payments?
Offline payments will be mandatory and will obviously take some time for commercial banks, payment service providers, financial institutions to actually implement. So that has to be a strong consideration. It could take 12 months, let's say, for a technology stack to be implemented into a commercial bank. So it's something that needs to be considered, very soon in the near future by those entities and financial institutions. I mean, ultimately, the implication of having an offline service not working correctly is obviously that it doesn't work and people can't make payments, right? And if that's the case, then how do the adoption rates then, the uptake on adoption rates? People will just get frustrated and will not want to, use it in those scenarios where perhaps you don't have a mobile signal or, the merchant, for whatever reason, terminals are down, or could be in, an underground or remote parts, even in, Central Europe where connections are very strong. These outages and issues do happen. So, adding some form of, correct technology to enable offline payments is going to be paramount for those, both as consumers and providing CBDC services.
What would be a correct technology for that?
Well, perhaps being slightly biased, with our dual offline consecutive payments, and that's something we focused on, very early when designing our solution, Orium. But for us, the reason why we built that in both having the payer and payer would be offline is that there are no implications for either party paying. So, making sure that both can be settled offline consecutively, and then at a point of then coming back online, or even within hopefully the API or the stack or the wallet, the software itself, you can actually see whether or not you're online, where those transactions actually took place. and if that offline transaction has then been settled online, and you can see that that's actually taken place in both being a consumer and also, you know, on the other side being a merchant, knowing that those payments have gone through successfully and it is robust. So that was a huge consideration for us at the start, making sure that that has been implemented and works within our stack. So trying to be unbiased, you know, for the purposes of this, but yeah, so any sort of institution or merchant that is going to be having some form of solution needs to make sure that it's dual offline and can be executed correctly.
So do you think like an offline transaction has to be settled sometimes online as well? Or do you think it's like two different cases? You have an online transaction and an offline transaction. And how do you see this topic described in the proposal? So
yeah, I mean, obviously the proposal is basic at this stage, you know, for the ECB to offer those services. I think that's really where the innovation will come. You know, as Daniel said, you'll have digital euro 1.0 iteration, and then there'll be additional iterations on top of that, as well as how, you know, those PSPs evolve, the fintechs evolve, and the services that they provide either directly or white labeled. But talking specifically in terms of our approach and how we're doing it at Fluency, is that within the wallet, you will see that there is an offline transaction. So if I walk into a coffee shop at, you know, 8:30 in the morning and that transaction has been settled offline, I know that that transaction was offline, and then will go from offline to then read online to know that the payment has been settled online. So there's a few ways of doing it, and looking at it from a consumer perspective. Like for myself, if there are any question marks over whether or not I did or didn't pay, and my bank's calling me and saying, well, hang on a second, that coffee purchase you made, or whatever purchase it may well be in the department store, didn't go through, I can then go back and say, well, hang on a second, I have the offline record here that was settled offline. And as far as I can, you know, as concerned as the consumer, that transaction has gone through. So it's at the, you know, the back end where the problem is. And then there could be the option whereby I paid in the department store, you know, in a lunch break, and then came up from the lower ground floor to ground level. I've walked outside, and then 10 minutes I can see that that's gone from offline to online. So yeah, there's a few ways of doing it, but talking about you know, our approach specifically, that's how we will do it.
okay, because I understand the proposal in a way that it says offline payments will not be integrated with the online payments, so that we have like two different types of payments and they will be separated.
Correct, yeah, but that, as I say, that's from the initial basic services, right? I'm talking, you know, how will that be integrated within a commercial banks or your PSP, and how they will then show that. But yeah, there'll be then, as you say from the proposal, two iterations. The first iteration of offline, and then it will go to the second iteration for the merchants as the digital euro progresses.
Okay, yeah. Thank you. Daniel, does the legal proposal imply a user-friendly digital euro? And if yes or no, why or why not?
Yeah, so let me put it that way. There are some concerns basically, and then so first it might be like, you know, I don't know, weird to speak of like user experience of a money or of a digital money, but I mean it's like more important than in other practically software. It's because, you know, I mean, money is basically like a social construct. So if it has a value if people use it. If nobody uses, then it will not have any value practically. So I mean, for this reason, it's just more important to have basically something which is a good user experience. And you don't actually mean by the user interface itself. I just what we thought basically is that the core logic might be confusing, and that's because there are just too many different use cases. Like we got account limits, we got shared multi-person accounts, we got like one person having multiply accounts, and of course limits. We got like offline and online money, and so on and so on. So I mean, the concern is if there's like a transfer, and then in like in every 5 use cases or transfers, we got like an error message that something went wrong. It is something which is a bad user experience. So again, I don't mean of like the user interface, or if the user interface should be fancy. I just mean of the core logic which is formulated by the proposal. And then considering these use cases as well, I mean, of course, privacy might be a question as well. Privacy is relatively good formulated, but considering these complex use cases, actually, it is a little bit like questionable if it can be really set up in a way as it is formulated, basically. So again, this is what we mean of user friendliness, having all of these different use cases combined in one consistent system. So at the end of the day, the customers don't get like failed transfer in every 5th transactions. That's what we mean, or that's what I mean as user friendliness. And there are some concerns, basically, if the proposed system can be really realized in a consistent user friendly manner. So for this point, actually, we just propose to set up like a rule book covering all of these use cases and all of the combination of these use cases somehow in a matrix or in a consistent way. So that's what we mean of user friendliness or user experience of the digital euro itself.
Thank you. Cyrus, you coming from a bank, knowing a lot about good user experience, what do you think? Does the legal proposal imply a user-friendly digital euro?
Well, it's, I think, a little bit too early to call, because it depends really on the technical way to implement it, and I think the interface is quite important, and obviously a fancy interface which does not work, it does not help. So all those things which are going on behind have to work. But this is, as a non-technical guy, I would say it's not decided by the law itself, but by the people who will provide the hardware and the software. So I would say it's a little bit too early to call if this will be a user-friendly digital euro, but I'm sure that the ECB is very much interested that it is a user-friendly digital euro, because this is the main key to find enough acceptance and to make the digital euro a success.
Thank you. Another point that has been discussed by the banks, as you said, they will be the one who might distribute, or they will be part of the distributors of the digital euro. At the same time, there will the law says, or the proposal says, there will not be any fees for basic services. Do you agree with the fee regulation proposed or not? What would you consider?
Yeah, I think with respect to fees, there are two issues here to be discussed. The first, what you mentioned, is that the use of the digital euro for the end user should be for free. And the second is that merchants should not be burdened with excessive fees when they use the digital euro, or when they accept the digital euro. So as to the first, I think it would be a no-go if the use of the digital euro, which is sold as a substitute for cash, would involve additional costs. So this would be very bad for the acceptance, and so it is good that the law says that citizens do not have to pay for using the digital euro, even if obviously there are costs involved, like it is the case when issuing cash money too. The second issue, or the second proposal, that merchants should not be burdened with excessive fees, means, in my interpretation, that the fees should not be significantly should be significantly lower than those which are are asked by private payment providers. So this is, let's say, a direct attack on MasterCard and Visa and PayPal. It does look perhaps like an unjustified state intervention, which is discriminating foreign capital. However, I see this step as rather rational. It would be naive to think that private payment providers were not striving for a monopolistic position in this market. The payment area is living from a network effect. So this is a very clear possibility, and we know it from other tech companies which are doing business in network areas, that once such a monopolistic position has been attained, it could be misused by increasing the fees to new levels. So I think the public sector has a right to implement a public payment system in the form of the digital euro, with controlling the fees in a way. And I think it's, at the end of the day, it should be in the best interest of citizens and the business.
So you think the digital euro will become a competitor of MasterCard and Visa?
Yeah, I think so. I think that's one, in a way, one basic idea, to have a unified payment system which ensures that the competitors, which are partly and mostly from abroad, will not get a monopolistic position.
I see. Do the others agree? Do we need a European solution to be more competitive, or to have less fees and be more competitive in the payment landscape in Europe? Brett?
Yeah, I believe so. You know, I guess, as you say, with a monopoly, duopoly, that just taking it outside of within payments, but within any industry, obviously there normally comes an association with fees and kind of having carte blanche on what you can charge, right? So encouraging competition, potential undercutting, or an increased level of service, hopefully will be beneficial for all involved. So yeah, I echo what Cyrus had said.
And Daniel?
Yeah, I mean, basically, I agree. So, like, you know, I mean, money and payment is pretty much like the basics of like the economic. So, I mean, yeah, so cheaper payment solution, or more competition in payment solutions. You know, it just can't be wrong.
But then we are discussing holding limits. Will this imply some kind of hurdle to be a competitor to MasterCard and Visa, or will the holding limit be helpful for that? Cyrus?
Well, I think it's about fees in the context of making payments, and it's not about being a competitor to Visa in distributing loans. That's not. It's about payments, and so far I don't think that this would require having holding limits or adjusting or having higher holding limits than the ECB or the EU Commission is envisaging. I don't see a contradiction here. I don't know if the other participants have a different view on that, but I don't see a contradiction here.
So the citizen will pay with the digital euro, even though there's a holding limit of, let's say, 3,000 euro.
Yeah, you have this waterfall solution, which means that if you pay, for example, 4,000, then you take out automatically 1,000 from your bank account, and then you transfer 4,000, and the one who received the 4,000, their 1,000 or what is going above the limit is going automatically into the bank account. So it's very concentrated on the transfer, and in the context of corporates, as I understand it, the limit is at 0, so it's all a kind of waterfall solution. And yeah, there the digital euro payment system will be competitor to Visa and MasterCard.
Let's stay with the holding limits. Daniel, you said the use case of holding limits will complicate the whole infrastructure, and like the use of a digital euro. What would be your solution? No holding limits? You're on mute.
So sorry, was it me? It's just it just broke for a second.
Yes, please.
Yeah, absolutely. Yeah, sure. So the point is, again, I mean, this holding limit, especially considering with like other use cases, it's just too complicated. So I mean, the only concern that we got, if there's the possibility at all to design a system which is, you know, consistent, usable, even easy to use, and so on and so on. So and then especially the holding limit, which makes the things difficult, especially if you want to have like holding limit for one account, holding limit for multiply accounts, which is owned by one person, holding limits for online and offline payments, holding limits for accounts that are owned by multiple persons, people, and so on and so on. So this is what makes things actually more complex, but there might be that, I mean, there can be a good system designed nevertheless. So what we were brainstorming actually a little bit in the working group, if there could be another way, because I mean the motivation behind holding limit is to limit the store of value functionality of money, not to disintermediate the banking system practically, or not to compete with the banks. So the question was if there can be a functionality which efficiently limits the store of value functionality of the money without introducing holding limits. And then ideas are like, you know, setting like a hyperinflation to a coin, or setting a time limit for the money, and so on and so on and so on. But this is very much, you know, it was just a brainstorm. So I wouldn't say that like holding limit is wrong. It's just we were a little bit like considered if there's a possibility to limit the store of value functionality of the money without introducing holding limits. Again, and the idea is like hyperinflation of the coin, or somehow time limit of the coin, and so on and so on.
Well, there is one solution which would be to implement a tiered system where you say, okay, 3,000 are without interest rate, and afterwards you have to pay fees or a negative interest rate. You can name it like you like. If there is stress in the banking market and people are withdrawing their money from their bank accounts and putting it to their digital euro account, then the ECB could theoretically increase this fee above the threshold, and so requiring a higher negative interest rate, and this would then discourage people from transferring money, private money, to the digital account. So this was an early idea, which even came from the ECB itself, but obviously politically it seems to be too hot, or I don't know, and so they have decided or now proposed by the EU Commission that to skip this idea altogether and to stick to 0 interest rates and a holding limit. And perhaps it's politically wise to do so. in economic terms, I would say it would have also be a solution to have holding limits in combination with the possibility of a negative interest rate. The thing here is that, and it's a caveat, let's say, that it's not so easy to tell the people, hey, you get a digital euro, which is kind of a substitute for cash money, and at the same time you say, but you can only hold 300 or 3,000 euro in it. So then the people say, okay, but you tell me it's a substitute? No, I can hold 10,000 or 100,000 in cash money. So it's not a substitute. So this is a kind of problem when we are talking about acceptance. And the ECB and the EU Commission seems to have find this kind of compromise, which maybe is wise. I'm not sure, but that's what they have found as a solution.
But then at the same time, I ask myself, how will they control the holding limits? Especially if digital euro users are allowed to have several accounts. How will they update the holding limits? And I ask myself, who will be collecting what data to be able to control the holding limits, right? What is your opinion on that, Brett?
Equally asked the same question as well, Hansapi, so at this stage, yet to be concluded. So, equally, the holding limits have been put in place for a reason to obviously safeguard, as discussed. Personally, in my opinion, I think as people adapt and become familiar with digital euro payments and the market has evolved, in my opinion, I believe that those holding limits will be removed, personally. But let's see how things evolve. Obviously, the Bank of England are looking at it slightly differently in terms of their holding limits as well, and being at a higher level. And as different central banks progress with it as well, I think different holding limits will vary across different jurisdictions. But if the adoption's there and once the uptick in knowledge and how these things will work, and generally, I think looking at the digital yuan, of the multiple hundreds of thousands, millions of transactions that have taken place, I think the average, don't quote me on it, but I think the average is about $262 per transaction. So, are people really going to be spending that much money on a regular basis? And is it purely for smaller transactions on a day-to-day basis? So to be concluded, I guess.
Taking up the Chinese model and the fear of a lot of citizens about the digital euro being a control tool for the government to look into the transactions of people and to be able to stop the payments and to see who is paying what. Daniel, do you think that the proposal is protecting the data and the privacy of the digital euro user enough?
Yeah, so I would say, there's an extra emphasis on privacy issues in the proposal, especially personal data, and it's probably not a coincidence. It's just usually there's not very typical to have so many privacy questions in a proposal, in a legal proposal. But basically, it is proposed that basically there are two layers. The online and the offline payment, and the offline payment has cash-like privacy. That's explicitly emphasized in the proposal, and the online payment should be visible practically to the sender and the recipient's payment service provider, and practically the payment and the recipient for the first run. That's how it is very strongly emphasized. It's like the European central banks or any central banks should not see basically personal data for the transactions. So this is pretty well formulated. We raised some concerns if it can be really done, and especially in terms or regarding with the account limits. It's because considering the account limits and that people can have accounts actually at multiple payment service providers. At initiating a transfer, basically there should be somehow queried multiple payment service providers. How big is the limit of a certain person? So it might raise some privacy issues, and it's questionable if it can be realized. There are probably ways like advanced cryptographic technologies like zero knowledge proof, homomorphic encryption, and stuff like that. That can be capable of doing something similar, but it's so the realization of the multiply accounts and account limits and the proposed privacy is it's far from being trivial. I would say, but certainly it's very far from the Chinese model, I would say.
Cyrus, what is your opinion on the data protection of the digital euro user in the proposal?
I think that technically the ECB has certainly ways to get those information about single transactions. And so far you need some legal proposals to protect the clients, which I would expect very much that this will be done. Apart from that, we should have always in mind that when talking about I don't want to give my data to other institutions, well, we give our data every day to the banks when we are doing payments. It's not that we are making anonymous payments in the today's payment system, and that the digital euro would be a complete change in this respect. And in addition, if the state have some suspicion that there is money laundering or terrorism financing, then obviously he can and will in the future also have access to the data. So I would not over dramatize this private issue and expect very much that the ECB and the European Commission legal proposal will, at the end of the day, when it will be decided, have quite strong implementation that there is data protection happening with these, let's say, exceptions of looking into the data to a deeper degree when illegal things are happening.
Thank you. Which articles or nuances in the proposal would you like to see changed and why, Brett?
I don't actually have any personal preferences on any of the articles that should be changed. I guess we've obviously covered most bases, but as my general personal considerations, I really think that privacy and data security is paramount. So not only like for me, I'm not doing any illicit activities. So for me, it doesn't matter if I've spent €5 on a coffee. It doesn't matter if my bank or the ECB see that. It's more so having a data breach or a leak. But that being said, certain airlines have data breaches, etc. as well. So that would be my concern, that making sure that there's a robust technology to make sure that leaks don't happen, more so in terms of what I or a consumer is spending on a day-to-day basis. obviously the inclusivity of that, so making sure that there's provisions for a digital euro to be included for those that, you know, that digital literacy, you know, accessibility is paramount as well, and financial inclusion. A big thing as well is interoperability, so making sure not only can, you know, digital euro move within the EEA, it can be moved globally with also other digital assets as well to maximize adoption. Again, going on the back of the kind of privacy, that's twofold. I would say, so consumer protections to safeguard those from fraud, scams, you know, anything else that could be associated with digital currencies. Another thing that we've covered is competition and market structure. So important that there isn't a monopoly or duopoly, and there's a level playing field for various service providers. Cost efficiency as well. So to make sure that implementing and maintaining the digital euro is cost effective. Having legal clarity as well. So having a solid foundation within the proposal to make sure that you know, a potential digital euro has the relevant legal clarity, international implications as well, so coordination with other central banks, and equally as things evolve, and no doubt there will be challenges and hurdles for the digital euro, and you know, the banks and the consumers and the merchants, is that continuous feedback and stakeholder input, so that those potential you know, teething problems can be overcome, and that ultimately is, you know, the maximum adoption, and that perhaps in, you know, 5-6 years time we're all running around spending a digital euro quite seamlessly. So that would be the ultimate goal. So yeah, just my kind of reflection on the proposal.
Thank you. Cyrus, is there something you would like to see changed in the proposal?
Yeah, well, there were many things that were already talked about, and I've made the point already about the storage issue. I have a certain preference to have no storage limit, but something that is priced, so that people can decide how much they would store, because then you would have more kind of real money they are familiar with. In addition, the point that an interest rate will not be allowed is a kind of thing that means that the ECB has or it's a missed opportunity in terms that with interest rate on the CBDC, the ECB would have a more direct tool to steer the economy and therefore also inflation, because the transmission process in hiking or lowering the interest rate on CBDC would immediately translate into the spending behavior of consumers. So this is something that now this option is not anymore there. And finally, the other issue is that I don't see any sign that the digital euro would be compatible with any kind of blockchain. So I think it would have been a chance to give a boost to the tokenization of assets. And this is also kind of missed opportunity, especially considering that there seems to be a big mistrust against any kind of stablecoin project, as it is seen as a competition to the digital euro. So everything you hear from the ECB with respect to stablecoins is, in my perspective or my view, a lot of mistrust, which in a way is justified because we had some stablecoin projects which were not stable after all. But the basic idea of having a stablecoin as a settlement coin, which enables tokenization and provides a platform for innovation, I think this is a good idea.
Thank you. And Daniel, how about you?
Yeah, so I mean, we already covered a couple of very good points, and I absolutely agree with these points. One thing that I might raise that I mean, it's my opinion, but somehow the proposal is, I would say, it's not technology agnostic enough. So it focuses very strongly on requirements of a possible instant payment system. And I fully agree that I mean on the short run, that's the fastest way of realizing digital euro. Just having the existing and old technologies, that's the fastest and that's the lowest risk approach. But on a legislative proposal side, I mean the proposal itself might be more technology agnostic in a way that basically it allows not just like account-based instant payment systems, but basically tokenized money as well. And even if it comes only on a long run, so it might happen that the first version is like classical tried out technologies with instant payment, but there should be at least a possibility that on the long run it is migrated to or improved to a tokenized payment system. And I would say that's what missing a little bit. If the proposal is like less technology agnostic a little bit in a way, then there might be a possibility, just to consider, at least on a long run, tokenized payment solutions as well.
Thank you. We will now open for questions from the public. And I have here the first question. Regarding offering retail CBDC with attractive fees and services for the end consumer, wouldn't that make the central bank compete with the commercial banks and disintermediate the banks? Cyrus, I guess that's your question.
Yeah. I tapped this subject already in a way. I think that banks, with respect to the plain vanilla, to normal, let's say, retail payments, are not even doing a lot of profit with. The profit is more done with respect to payments which are more tailor-made for corporates and financial and other institutions. So institutionals like pension funds or insurance companies and so on. And I think the ECB is providing mainly a platform, a payment platform and basic solutions. And this can be taken and will be taken as a platform for do innovations and for make tailor-made solutions for the clients. And so far, I believe that banks will be able to stick to this business model, and to I would not expect the ECB to compete with banks in this area.
Okay. Now a question for all panelists. PayPal announced the launch of a US dollar denominated stablecoin, PayPal USD. Would you expect something similar like PayPal Euro? What would this mean to the digital euro by ECB? Brett, let's start with you.
Yeah, I mean, as Cyrus has mentioned, the stablecoin in any form, and has been mentioned by Fabio Panetta in terms of not being a preference in terms of PayPal stablecoin, and the challenges that have already gone ahead with previous stablecoins obviously not being that stable. So I see a place still within the kind of digital assets bucket for stablecoins and cryptocurrency, but ultimately for kind of wholesale and retail, majority of payments will be in the form of a CBDC digital euro, in my opinion. So I guess the advancements need to continue in that area, and there needs to be consumer reassurance that those stablecoin offerings are actually stable. So yeah, it may well form into just their generic stablecoin across different denominations, USD, Euro, but yeah, no doubt PayPal are obviously a huge entity with a lot of resources, so no doubt they will continue to advance. Again, hopefully for all involved, because future innovation will hopefully enable additional things. And as I always say, we were all familiar with our, Nokias, many years ago, and thinking it was great to text each other and being able to play Snake. But now when we look at our Androids and iOS, the things that we can do, with our devices is incredible. So allowing payments to come to the forefront of that as well is going to be a good thing, in my opinion.
Daniel, what do you think?
Yeah, so economically, a stable coin is like is a much higher risk asset than a central bank money, of course. It is at least like 2 times riskier, because on the one hand, even if we speak of like a fiat-backed stable coin, I don't speak about like algorithmic stable coins or crypto-backed stable coins, because that's Wild West. But even if you speak of like a fiat-backed stable coin which is issued by regulated financial institutes, then first, the question is if that peg can be held between the fiat money and the stable coin itself, even if that's the issuer is a regulated financial institute. And on the other hand, there's, if we speak of fiat money, that's like practically a kind of a private money, which is backed by central bank money and maintained the peg somehow. So this is like 2 times the risk factor, I would say. If we speak of like direct liability of the European Central Bank, that's the lowest risk asset or money that's possible practically. But the point is that people don't know it. So people just use it because you get like fancy, I don't know, Android or iPhone app. So they don't see the risk factors behind these stable coins. And then, yeah, sure. There's a risk that, stable coin gets like much faster widespread adaptation than like CBDC, especially if like, such technology providers can push that very strongly.
Thank you. Do you agree, Cyrus?
I wonder what is going on in the United States, because when I remember that Facebook launched its Libra proposal, there was so much resistance against it, and the speaker of Libra was grilled in the Congress, and at the end of the day they did give it up. So it saw no chance to get it through. And now, well, it seems that PayPal easily announcing this and going forward with it step by step, and nobody is saying something, or at least nothing that I have seen. So even though the chance of having a similar reach, well, they have not 2.6 billion people, but 450 or something million. So it's quite a vast amount of people which can be reached with it. And so I'm quite some question marks in how far the regulator is doing something here or not, and apart from that, I don't see a big chance of stablecoin of PayPal to implementing its stablecoin here in Eurozone.
Thank you. Next question. Credit card agencies normally don't charge the consumer and instead incentivize the usage of a credit card with point systems. How do you reckon would a retail CBDC change consumer behavior and incentive systems? Cyrus.
Well, you have the merchants who have to pay. So, and then if the merchants say, well, I don't want to have Visa and being paid with Visa and MasterCard because I have to pay too many fees, then there you have an incentive to have a change. And so I suppose that through this way you will have or lower fees by Visa and MasterCard to compete with it, or a lower market share of them.
What do you think, Brett?
Yeah, there will be continuous innovation, incentives, rewards, air miles, with being able to use a CBDC, multi-CBDC across different jurisdictions, perhaps when traveling with an airline or, booking a hotel, for example. Then if it stays within a certain, denomination, there could be incentives, lots of different things, whether or not it be sort of a Netflix service or a music streaming service. This is where the innovation will come for the PSPs in terms of incentivizing, Apple with its, interest rates as well, offering high interest rates to attract people to put deposits. So yeah, no doubt there will be continuous rewards and incentives for those that will be transacting or holding CBDC.
Do you agree, Daniel?
Yeah, so probably to answer this question, really, it's a little bit like beyond my competence. What we realized basically, or what we saw as a concern during the working group, is that the fee structure of CBDC is practically regulated centrally by the European Central Bank and by different actors. And what we saw as a concern, if that such a regulated fee structure can really compete practically with actors on the market. Sometimes it's manageable, but yes, so sometimes there's some bad experience with like totally centralized, controlled market things basically. So that's what we saw basically as a concern. It might happen, it might not be a problem at all.
So I have one more question. How does the digital euro legal proposal compare to those proposals of other jurisdictions? Do you think we are generally well off with the proposal in the Eurozone, or other jurisdictions enabling more exciting forms of digital money via their legal proposal, for example, enabling programmability? Cyrus?
Well, I actually don't know many other legal proposals. I'm looking to the United States, and what I have seen there is some years ago there was kind of not even a legal proposal. There was only a first assessment of the pros and cons of a digital dollar. So my feeling is that they are lagging behind very much to the Eurozone and to the ECB, which also is a chance for us in getting more weight in terms of the euro as a world currency. And so obviously China is more advanced because they are already in the status of doing pilot projects to a larger scale. But admittedly, I don't know any written paper on the legal basis for this currency. Yeah.
What do you think, Daniel?
Yeah, so basically I agree. From my side as well, I don't know much other proposals. What I'm familiar with is something which are the other initiatives, for instance, and then but again, if there's like legal proposal behind or not, it's not something that I know. So for instance, if you consider China from a technological perspective, they do like a hybrid stack with partly centralized ledger and with a very with a lot of new cryptographic. And of course, from a privacy perspective, it's certainly not something which is optimal on the European market. And I'm not quite sure if there's practically legal proposal behind. The system is live, basically. Another example, correct me if I'm wrong, as far as I saw, like in the UK, there are initiatives for considering synthetic CBDCs, basically. And in the US, there's one initiative that I know that's practically the digital dollar project, which is again, that's kind of a semi-decentralized or semi-centralized ledger, practically, which is built up from scratch, totally on primitives. I mean, primitive algorithms of the Bitcoin, for instance. But again, it's centralized, it's controlled, and so on. So that might be like the basis, for instance, for a digital dollar. But again, these are like the platform initiatives. I'm not quite sure if they have legal proposals behind.
Okay, Brett, do you want to add something?
Yeah, again, there are not too many within other jurisdictions. Obviously, the ECB and EC are leading the way in terms of the legal proposals for a digital euro. As Daniel mentioned, there are other initiatives outside of central banks that are obviously exploring CBDC. When you look at the Bank of England in terms of programmability, I think for the ECB, as things evolve, whether or not it will come directly from the ECB, because as mentioned, they're looking at a basic service and will allow those PSPs and fintechs and FIs to add the innovation on top. But I think conditional payments, programmability, certainly within the, let's say, the real estate market, whereby if certain parameters are hit, money goes into escrow and then it's released. Even something as simple as buying a car, once the car has then, I don't know if the agreement was for the car to be serviced prior to the acquisition and taking over the ownership of the vehicle, that had then been satisfied, then the next part of the smart contract was facilitated and it would move to the next part of the chain of the conditional payments actually being released to the car seller. Equally, again, the same could be done within supply chains, within the certain parts of those invoices being settled with conditional payments. So I think in terms of the proposal for the ECB, programmability and conditional payments, smart contracts, adding on to different iterations of a digital euro may well come from different jurisdictions as well. Equally, as I mentioned, that's what stemmed from the Bank of England. Is having programmability. So I guess we're all still evolving and obviously open discussions, but yeah.
Okay, thank you. So we will end the discussion with a look into the future. Imagine it's the year 2040. Where does the digital euro stand, and which role does the proposal play for the digital euro project and its further development? We start with Daniel.
Yeah, I hope by that time, we will see a live system practically that we can use, and then that will be kind of a first step of future payment innovation. Even if that's working as a first step, but that will be basis for the next steps of digital payment innovation. And voila, that's probably based on the proposal. Yeah.
Thank you. Cyrus?
Yeah, 2040. This is quite some time far from now. I would say the proposal is a good basis to find enough acceptance and to have a good start with the digital euro. And so I could imagine that given such a good basis, the innovations will also get advanced, and I think that by then we should also have more solutions in the direction of tokenization of assets at the latest. Yeah.
Thank you. Fred, how about you?
Yeah, well, hopefully I'll still be around in 2040, but yeah, as Sarah says, it's quite some time away, and I guess within blockchain and digital assets, 1 year is almost like dog years. So by 2040, hopefully we'll be all running around paying with the digital euro, digital pound, digital dollar, whatever it may well be. Probably be some more crazy advancements with AI and the next big thing by 2040, but certainly within the next 3 to 5 years, hopefully we see a good, solid payment, platform, wallets, etc., for a digital euro, and a lot more innovation coming. So yeah, exciting times, and fingers crossed that is sooner rather than later.
Thank you very much. It was a very interesting discussion. I hope our audience is now has now more information on the digital euro, on the proposal, and all questions were answered. And we are looking forward to October, when the ECB wants to tell us their decision on the digital euro, and the follow-up then on how the development of the digital euro will proceed. Thank you. Goodbye.
Thank you, everyone.
Okay, thank you very much.